Hey, welcome to Cash Flow Hacks. I'm your host, Chris, and I'm so excited to be here today. This is a podcast where we like to help our clients learn how to make more, save more, and live more now. And today I am bringing on one of our favorites that works with us, special guest, Mr. Russ. How you doing today?
I'm doing great, Chris. Thanks for having me. I'm usually one of the guys in the background helping people out. And today I'm happy I can be up front and try to help some more people out as well.
Yes, we are excited because, the less we know, the more they make. And who am I talking about? Talking about people in the financial industry, our advisors out there. And the reason why we're doing this is because the less we know, the more they make. And we want to help our clients flip that script. So this week, we're going to be talking about 3 ways to benefit from life insurance. And you are the pro. And I love talking to you about life insurance. How long have you been doing this, Russ?
A little over 20 years.
How many clients do you think you've helped?
Clients I've actually helped that I've actually put into paper, probably somewhere between 15 and 18,000 people over the last 20 plus years.
Wow. So you know what you're doing. And I really like working with people that want to help people. There's a lot of life insurance agents out there right now. They make a lot of money in commissions. And a lot of people are afraid of that. That's why they're not. I've had people say that to me. I don't like life insurance. You're making a lot of money on this and I don't like it. So let's talk today a little bit about why do you sell life insurance? I know we don't even call it that.
Yeah, I don't call it life insurance. And a lot of people are afraid of the term because it has the negative connotations that a lot of people, like you just said, there's a lot of people out there who represent a product using life insurance as an example, and they represent it as a product to make a commission. They're not actually doing it for the right reason. And there's policies or plans that are designed for the agent, and there's policies or plans that are designed for the client. I focus on providing the best vehicle for the client using cash value accumulation vehicles or general insurance vehicles because of the advantages that they bring, not just for financial gain, tax-free growth, but the structure to protect the family. The legacy planning is really where I focus because at the end of the day, 99% of the people plus always want to make sure that their family is taken care of no matter what happens. That's why they do what they do. And that's what I focus on.
Legacy. I know that's a word that you've used since we've been working together. And I like that about you. I always feel that, when you help the client, you take care of the client, that they're the most important, that they're going to come back. And they realize you're not trying to take advantage of them. And they tell their friends about you. So it really does benefit both sides, not just the life insurance agent.
No, it doesn't. It's very beneficial to me. I'm very enthralled in my business because I get to help people every day. My personal mission statement that I use inside our organization is to leave people better than we found them. And that means a lot to me because anytime I can have a chance to have a conversation with somebody, I've always been able to offer them some type of information that's going to be beneficial to them, that's going to give them the truth behind a matter, as opposed to just the bureaucracy that's out there that continues to pour different misinformation out there because it's designed for business growth. I don't look at business growth. I don't look at the revenue structure. I look at what can I do to help this particular person, this particular family be in a better place for that what if moment or when that moment happens, because it's going to happen. I look at and I joke with people all the time. Everybody today typically carries a driver's license and there's always a DOB on there. And so everybody knows what their date of birth is. Well, most people do. Some people have to look it up when I ask them. But it's amazing. I ask many people I talk to, I ask them what their DOD is. And they look at me kind of funny because no one knows when they're going to die. But we all know it's going to happen. So would you either rather be prepared or would you rather think it's not going to happen to me? Because I can tell you that is one of the guaranteed things in this life, death and taxes.
Oh, right. And both of those are the things that we like to protect our clients from, the 5 enemies of wealth. And when we're helping our clients, one of the first things we do is, we want to build a wall around our clients, whether it be with estate planning or life insurance or whatever it may be to protect our clients. And since you are always in the background, as far as when I need help with our clients for insurance and I want to know they're going to be taken care of, I come to you and ask you to design our policies for our clients so that they can have the right insurance in place, because there's lots of ways to use life insurance. So one of the things that you and I, or a lot of our clients together, work with are bank funded policies. What kind of life insurance do you think that you deal with the most?
I'd say primarily the two main types I deal with are indexed universal life, which is a cash value accumulation product, and whole life, based on the person's dynamic and what their situation is. The only really other type of basic life insurance out there is term, which is good for a particular period of time, which is why it's called a term. And a lot of times I will position people and we'll stack policies. So we'll put a cash accumulation vehicle like an IUL or a whole life, and then we'll also add a term on because maybe they're a younger family. Maybe they have a larger financial liability that if something did happen, this is the in case protection, that they have that additional level there that they can provide it. Plus, insurance, as people know it from before, is not the same as it is today. Most of the insurance structure, especially the ones I deal with, have features in them. One of them called living benefits, because one of the features of living benefits that a lot of people don't think about and why they're put off when they hear the word life insurance is they think, well, it only pays when I die.
Right.
And I ask that question a lot of times when I talk to people and I'm like, what do you have? And they, well, I have life insurance. And I'll ask them, is it the old kind or the new kind? And they look at me like I got two heads sometimes. And I'm like, well, the old kind basically covers you when you die, because I'll say, when does it pay you? And it pays you when you die, and you don't receive any of the benefits. Okay. But as you know, not everybody dies today when something happens. Sometimes they get sick. Sometimes they have heart attacks, strokes, cancers. There's 18 different triggers that can actually trigger an event. So it's either chronic, critical, or terminal that can be triggered, that you can actually appreciate the benefit of the plan while you're still alive and still functioning.
Right. That, you know what, that's one of the things I love about life insurance these days is there's so many ways that you can use them. Like they're a tool. They are life insurance, but they're really a tool you can use. Living benefits. That was one of my favorite things when I first started learning about life insurance. The newer life insurance has living benefits. It's like, well, if I get sick, I actually have access to the death benefit now. Most people don't even realize that that's even available to them. And so I'm glad you brought that up, because that is a very important part. And as far as like the cash value goes, there are a lot of different ways of becoming your own bank. You hear people talking about that all the time. You deal with that too. We do that with our clients.
I do a lot of that, because there's different times or different ways that you can utilize platforms that a lot of people don't realize the value of insurance. Insurance is a tremendous vehicle because it's actually allowed through the IRS code 7702 that allows you to put money in after tax, and it can grow completely tax-free for the rest of your life. It is one of the only vehicles known out there today that's actually allowed through the government and through the IRS that allow you to accumulate money tax-free. So it has a lot of strong advantages to it. And unlike things like a traditional Roth that have restrictions based on income or based on what your overall value is, they don't limit you inside of these types of platforms. I have clients that will fund into the plans $500 a month. I have some clients that are funding in $15,000 a month based on their dynamic. So there is no restriction. The only restriction is yourself and what your ability is to be able to do that, provided you qualify, of course.
Right. Yes, it's also been called the rich man's Roth.
Correct.
But the other thing that you talked about is being able to put money into it. The government allows us to put in a certain amount of cash, and most people don't even realize that there's that amount of cash that they can put in that, like, for instance, you have a certain death benefit, but you can use this. It's asset protection.
Correct.
It's another way to create asset protection.
That's 100%. It's a tremendous tool, and then it's used a lot. You had talked about some of the walls of protection that we talked about, estate planning, just your overall process of what's going on. When you understand how the rules work, how the laws pertain to your individual situation, and this is what we do when I speak with clients and as a group, our main thing is educating people to actually how these processes work, how it's going to affect their specific situation rather than generalization. You don't see we don't advertise on TV or on the radio saying, yeah, you can buy, $500,000 in coverage for $14 a month, ring in their phone or call up on this number, because that's misleading, because people don't know what they need. So we have to figure out what a person needs, but more importantly, we have to figure out what their dynamic is. We have to figure out how it's going to work inside of their dynamic. Are we going to utilize it just for liability coverage? Are we going to use it for asset protection? Are we going to use it for cash accumulation? Are we going to use these vehicles for tax-free growth and tax-free retirement accounts? Because there are tremendous vehicles that we can utilize inside of these platforms that can fit pretty much any person out there today. And we can find something that's going to be customized to their dynamic, something that's going to benefit their home and take care of their legacy. Because at the end of the day, Chris, everybody, when I ask them the question, what the most important thing to them is, it's always their family. Everybody always wants to make sure their family is taken care of. That's why everybody does what they do. They want to go out there, they work, they struggle, they sacrifice to make sure they take care of their family. All this does is just helps them put a seatbelt on their protection for themselves and their family.
Right. I get it. And I really like the fact that, I personally use it as a way to, with some of our tax strategies that we use, we're able to use the life insurance death benefit and use it now, today. Then most people will never know about this stuff. They'll never hear about it from their traditional advisor. Like I said before, and if you're listening and you've never heard me talk about this, our goal is to protect our clients from the 5 enemies of wealth. And the 5 enemies of wealth, the first one, our biggest enemy, is taxes. So if we can figure out a way to protect you, keep more money in your pocket, that's where the keep more comes from. We want to do that. The second enemy is inflation. And the inflation, what we have to be making more. If they tell us that inflation is about 3% a year.
Yep.
But if you go to the grocery store, does it feel like that loaf of bread or that gallon of milk is only 3% more than it was last year?
No, not at all. And most people don't understand inflation. And that's another part of it, comes back to educating. That's where we spend most of our time. When people what they don't understand is, if you see the rate of inflation, a rule of thumb is that whatever the inflation rate is for the year, if you multiply it by 3, that's how you feel the impact at the grocery store. So when we were at 8% inflation in this past year, when you went to the grocery store, prices were up 25%. It's a simple math that a lot of people don't know. And you would think that the Fed or anybody of these other agencies out there would want you to understand how the numbers work, but they try to keep you in the dark. They don't want you to know. And our system is designed like that. And I hate to say it, in a negative way, that you would think the government should be our benefit, but they are one of the biggest causes of problem with people not understanding retirement structure and design, because they have people convinced that the system that you should contribute to, the 401s, the 403s, are something that's the most effective strategy. Because the one who's going to benefit, just like an advisor, is the government. Because you're not paying tax on the seed, you end up paying tax on the harvest. So you don't pay the tax on the money going in. You get all that growth over the 20, 30, 40 years. And who's benefiting that? You have a silent partner with the IRS, and they're the first person that gets paid on everything you put away. Not when it comes to life insurance. Life insurance is your product. It belongs to you. Nobody else has access to anything inside of that platform the entire period of time. Whether you're utilizing the cash inside the plan in case you want to use it for things like college education to help benefit for your children,
or an investment, you can actually take that money out
and leverage it. So there's a lot of things. So, and a lot of people don't realize I talk about college planning a lot of times with my clients because they have younger children and they're trying to create structures. Well, the one advantage of having a life insurance policy is it doesn't get counted as a recordable asset when you fill out a FAFSA form.
Right.
So, but when it's not there, they don't see it as an asset in your name. And one of the biggest things that bothers me going on college is that when parents set up a 529, and again, they set up a 529 because that's what their advisor told them to do. Well, who's getting paid on that 529 fund? The advisor is doing that. He's getting paid a override on assets under management. So of course, he's going to tell you to put it there as opposed to another vehicle. But that's a recordable asset. So when you go to fill out that FAFSA form and you had accumulated $30,000 or $40,000 in the child's name in a 529, that goes into the EFC, the expected family contribution, right off the top. So when you get your results on your FAFSA form, your EFC is high. So you're like, why? You don't understand it. You thought you did the right thing, and putting money away is the right thing, but there are better vehicles that I would ask you to look at to see what some of your other options are.
So now that you're talking about that, I tell my clients that all the time. It's like, plus, whenever you put it in 529, it can only be used for schooling. And what if your child wants to be an entrepreneur? Or it's like you can't use it for that. Another enemy of wealth, third enemy of wealth is market fluctuation. Now, life insurance is not an investment.
No.
Let's talk about that because there's a lot of people out there that are selling it as an investment.
Well, I mean, again, there's a lot of people that misrepresent a lot of different things. So what you want to do is it comes down to someone, in my opinion, that when you're talking to somebody, you have to be able to have that person answer questions for you or create conversation for you that pertains to your dynamic. Because everybody's different. You could have 100 people living on the same street, but you got 100 different stories, 100 different situations. So you want to find out what makes sense. So when people will say, oh, you can put money into the platform, your money into the insurance policy, and it's an investment. It's not an investment. It's a protection. There's a difference. You're mitigating your risk as far as the financial hardship. But the biggest advantage of cash value accumulation insurance, again, there's different types. Whole life is a guaranteed return, typically right around 5%. But where IULs or index universal life is very, very advantageous is that it actually works next to the markets. So it's not in the active market. So when the market is up or down, that you're winning or losing. Inside of these platforms, it sits next to the market. Basically, the insurance companies facilitate by using options. So when the market is up, they exercise the options and you share in the gain with that particular growth. But if the market goes down, your principal is 100% protected. You don't lose a thing. There isn't another fund out there that I know of that's going to protect your basis on any given point. So whatever you put in, you never have to worry about opening up your account and seeing it lower than what it was.
Right. I love that. So that can help you save. Life insurance doesn't fix everything, but it has such a great value, adds such great value to your estate plan, your financial plan, your everything that you have. The fourth enemy of wealth is devastation. So this life insurance, everybody knows that it's good for devastation, but we just want people to know that there's other ways to be able to use it today. You don't have to wait till you're dead.
No, not at all. I mean, unfortunately, at some point in time, that's going to happen. Someone is going to pass away. But that all becomes back down to where would you rather see your family? Would you rather left them a legacy or would you rather left them a burden? And a lot of people have that choice and they choose to not do anything. So because it is a choice. If the opportunity is available to them and someone talks to them and say, listen, this is what you can do, great. Now, there are some dynamics. Some people can't qualify to get coverage and different things like that. And those people would pretty much pay anything to try to get coverage at that point. The difference is that we don't know when that time is going to be. And if you have the dynamic inside of your family or in your heart that says, if I have the ability to leave my family in a better situation financially than just a hardship, why wouldn't I want to do that?
And those are definitely the type of people that I like working with, are the ones that want to take care of the family. I've actually spoke to people before that are like, I'm not leaving money for my wife to use with her new boyfriend. Or I've heard people say that, but they also have children and they're not taking responsibility. I like working with people that want to take that responsibility for their family and take care of them. And I know you're the same way.
Yeah, absolutely. This is the purpose, that the reason I do what I do inside this, there's a lot of opportunity to do a lot of different types of businesses. There is nothing more rewarding in my position that I get to sit there and I get to basically turn a light on every time I talk to a client and let them know that they have options, give them solutions to their problems, and help them understand that there are better ways to prepare and protect. That's really what we're trying to do, is at least understand what's available, and then you make the choice. And I want to give them the choice that they can say yes or no, because then it's on them. It's not on me.
Right. Well, since I've been talking about the 5 enemies of wealth, let me tell you about the 5th enemy, and that is litigation. That is lawsuits. So like I said a minute ago about asset protection, any money that you have inside of the life insurance policy nobody can sue you for that money that's in there.
100% protected.
And I have clients that have millions in their life insurance policy. And yeah, they can get sued, but nobody can touch that.
Well, you talk about insurance, and a lot of people understand what insurance actually is and the value that it does. And there's all kinds of people throughout history who've used insurance as vehicles. Some people you may have heard of Ray Kroc when he started McDonald's, Walt Disney. Yeah. I mean, there's a lot of people that understand the power and leverage. And if you were to go in and walk into and do a survey of everybody inside the House of Representatives or the Senate or Congress, whatever was there, I guarantee they all have millions and millions of dollars of protection. And the reason they have it is because they understand the value of that particular vehicle. It allows you to protect for a very, very inexpensive amount of money from your input. So you don't have to go out there. If you want $100,000 in coverage, $1 million in coverage, it's not going to cost you $100,000 a year to get that. You can do it because it's all based on mortality tables and structure. And insurance is all about they make money. Don't get me wrong. Insurance companies are some of the richest industries in the world. But don't fault someone because they're intelligent and know how to make money work to sit there and think that they're trying to get it over you, because we only deal with typically A-rated companies. So when something happens, you're not wondering, am I going to get paid? The money is there. And I've had to deliver numerous settlement checks to families. And I choose to do that by choice rather than just having the insurance company send it to them. And yeah, it's a very trying time. And I've gone in and I've done a lot of different things with families and conversations. And it's about helping them understand, because the other thing that you need to understand when someone does have a $500,000 life insurance policy and they're getting a settlement check, they don't necessarily know what to do with it. Because if that's what they're getting, that's great. And they have a $500,000, they're basically sitting tax-free that they can do whatever they want with. Well, they also need someone that helped the original person that got coverage to give them this protection. Now they're going to need some additional guidance on how to protect themselves and their family moving forward. So we can help them structure that, how to protect that, how to make sure that the protection doesn't just stop when the person's life ended. It continues on, and that's what we do.
Yep. That's exactly what we do. It's all about teaching people what they don't know and showing them how to flip the script on the industry out there. And I say even the government, and I probably shouldn't say that, but to me, it's just, we're in a system that it's been created to work against us, even though it's sold to us as it's to take care of us. But there's so many landmines that we can fall in. And our time is up today. And I want to thank you so much for hopping on with me today and sharing with our listeners, something maybe they've never heard about life insurance. And then I want people to know this is the type of person that we want to work with, somebody that's going to help us take care of our clients. So everyone, have a wonderful day. Thank you for listening. If you like what you heard today or you've been listening, sharing is caring. So make sure you share with your friends. Give us a like. We're on most podcast companies out there. We're on Apple, Spotify. Everyone have a great day. Thank you so much for listening.